Good morning, my friends. Welcome to today's Traders Mindchat show. I love that song. Anyhow, we've got a lot of stuff to talk about today. We're going to be talking about squats, handling squats, and how to mentally handle when your stock or your trade or whatever it is squats on you. That means when it pops up and then just falls right back down to earth. We're also going to talk about mindset. Mindset for a market being at highs, just like it is right now. Very appropriate, right? That's not a coincidence. So, big question that I'm hearing from a lot of people are, am I missing the rally? And so we're going to talk about the types of mindsets to have at this particular juncture. And finally, sizing strategies for today. So let's jump right in. Before we jump right in, though, we have a bunch of people signing in. Let me know where you're watching from. Let me know if you're one of our members. We've got a few of the members hopping on. Type that into the chat too. And yeah, let's get started. And of course, ask your questions as you have them. All right, so first things first over here. Squats. Handling them mentally. So I want to show you a couple of different charts here. So let's pull up the charts. Actually, let's make the charts a little bit bigger. There we go. All right. So I want to walk through a couple of trades that I'm in and a couple of trades that were on our alerts. So I'm just looking around the bend here because I've got my lamp in front of my face here. And now here is one that squatted, ERJ. And I know that a few of us are in this one, or I should say we're in this one. So here's what happened with ERJ. ERJ was setting up very nicely. And before I share all the annotations, the setup that I was seeing was this pullback where price was pulling back to the 50-day moving average. It started to get some lift over here, had some nice volume on and around the 50-day moving average and also the 21 exponential moving average. Pretty decent. Relative strength line starting to turn back up. The stochastics were good. The group rank was good. And then price started to break out and it kind of futzed around a little bit. And then today, it undercut these recent lows here and stopped me out for a 4% loss a little bit earlier today. So how do we deal with trades like this? Type into the chat and let me know how you handle trades like this or action like this. I have a few key strategies to share with you that will help you handle squats. So the first thing, write this down. You want to trade quality. No matter what it is that you're trading, you want to start off by making sure that you are trading a quality stock setup. If you're trading something else, maybe you're trading Forex, maybe you're trading crypto, whatever it is, you want to make sure that you are trading quality. So how do we know if we're trading quality? You probably have a few ideas in your mind. A few that may come to mind are, well, I want to make sure that it has a certain composite rating, right? So talking specifically to our friends that trade CanSlim or have been involved with Investors Business Daily for a little while. They have these different ratings, composite ratings, EPS ratings, ROE ratings, all these different ratings. And so they'll take a look and see, well, which ones have high ratings and go for those. And that's how they deem quality. Fantastic. How do you rate quality? And do you have that all written down somewhere, how you're going to gauge quality? Once you do, that's going to be the thing that helps you determine, am I looking at something that's quality or am I not? That part is so important because you want to make sure that you're focused only on quality. So let's assume that you have all that stuff listed out and that you found a quality setup. Great, that's going to solve most of your problems. But next up is our preparation. We need to understand that every outcome, every trade that we take has the potential to do this. That has to be part of our plan. Where that has to be part of the mindset going in. We of course we hope that price is going to go up, right? Well, what was my target on this? I was looking initially for a first scale out right at around 33 and a half, right? That would have been about a 13.5% gain, or giving me about 3 times my risk, a little bit more than 3 times my risk. Didn't pan out. I've got a plan for all scenarios. If we enter a trade and we're only thinking about the upside, that's no good. When we enter a trade, we don't know the outcome. That should make sense to us, right? And sometimes we forget. I know that I would forget. I know that I used to just focus on profits and where this thing could go, and maybe this thing has a great story, maybe it has the great fundamentals, maybe it has the wind of the industry group at its back. But that doesn't mean that things can't change. And so we need to plan for that. And we need to not only plan for it, we need to understand that, you know what, that's going to happen a decent enough times, right? You have a large number of trades. This isn't the only trade that I'm going to have this week, let alone this month of this year. So when you start to take a look at trades on a long enough time frame, you're going to have plenty of stocks that will squat or do something like this. So just looking at your stats, you should know, okay, I'm going to have roughly this many that squat on me. Will this one be it? I don't know. But I started off with quality. And so I'm going to take this trade and prepare for that potential outcome. Third, we need to track if more are starting to do this or not. Now, that's a very important part, and that's a very important part that I think a lot of people miss. Please type into the chat and let me know if you actively track your stats. Just type into the chat, say yes, say no, but please let me know because I want to make sure that I'm helping you with this part here in particular. So here's what's going to happen if you are actively tracking how many of your trades are doing this. It's going to help you become a little bit more offensive or defensive, depending on if you're seeing most of your trades do this, or if you're seeing most of your trades do this. It's also going to help you out to see if your more recent trades are doing this or if they're doing this. Because let's say that you're sitting on gains of 40% in one trade. Maybe you're sitting on 20 something percent gains on another trade. And you're like, wow, I'm sitting on all these profits. Let's plow them back into the market. Well, guess what? If you start getting a bunch of these in a row, what's going to happen to your profits? You're just going to be spending money like you're a drunken sailor, right? It's akin to the person that finally gets their paycheck and then goes out and blows it. Right? Well, we need to know what we're dealing with. So if we're paying attention and we're actively tracking our stats and we start to see, oh man, here's one that squatted, here's another one that squatted, here's another one that squatted. Well, guess what? That's going to tell us that, you know what? Maybe it's not such a great time to be going heavy. Maybe I should lighten up my risk. And so you put these three things together, right? You start off with quality. I'm not saying don't trade, but I am saying take the whole picture into account, right? So you start off with quality. You go in understanding that I don't know what the outcome is going to be, but because this is quality, I'm going to allow myself to participate in this one. Then you start to track your stats, and it's like, you know what? Is this a good environment or is it not? Because if the environment is starting to get a little bit questionable, then maybe you lighten up. And that's precisely what I ended up doing with this one. I wasn't aggressive on this one. I took a small position. I have three ranges of sizing that I use for my trading. We'll get into position sizing in just a little bit, but there's three. One is conservative, one's standard, and the other one you could say is more aggressive, right? So, by the way, for anyone that's hopping on here, we've got more and more people hopping on. Thank you guys for being here. Type into the chat. Let me know that you're alive. And I haven't seen any comments come in yet. Just say hello. But anyhow, next thing. The market is at highs. Am I missing the rally? That's a big question that people are asking. So here's a general market. Well, let's just focus on the NASDAQ, make it a little bit easier for ourselves. Here's the NASDAQ. Hey, good morning, Joe. Here's the NASDAQ. A lot of people are asking themselves, am I missing this rally? The NASDAQ is at highs. It keeps on pushing higher. And now we're above the 5-day exponential moving average. Well, we've been trading above the 10 EMA now for close to 2 weeks. Oh, man, I'm missing this rally. Let's start to do something silly. Let's plow right in. Is that a good idea? Well, let's start off with the first question. Am I missing this rally? If you're sitting here missing this rally, let's start off with the answer of yes. Yes, you are missing the rally. What should you do? What's the proper answer? I see you just popped in. I'm third. Welcome, welcome. So what would you do? And missing this rally, what would you do? What would you advise somebody else to do? Here's my advice for those of you that are saying, oh man, I'm missing this rally. I'd like you to think about the surfer, right? Well, what would happen to a surfer that gets down to the beach and says, oh man, I'm missing that wave? What happens if the surfer starts carrying their surfboard, trying to run down and catch the wave that they already missed? Well, one, they're not going, excuse me. Yeah, wow, getting choked up on that one. But what's going to happen is that not only are they going to already miss that wave, but they're also probably going to get wiped out by the next wave, right? Because where's their focus, right? It's not on catching the best anymore. Now they're off chasing this, but that's already gone. So what you should be doing is preparing for the next one, right? Don't worry about the wave that you missed. Work on preparing for the next wave. That's what we should be doing. So the real question becomes, how do you prepare yourself so that you don't miss out? How do you prepare yourself if you don't miss, so that way you don't miss out? This is very similar to the prior question about quality, right? All this stuff starts to fit together. Well, there's lots of ways that you could prepare yourself so that you don't miss out. I'll share with you a little bit about what I like to do. I like to monitor the major indexes, right? That's why I've got all these charts up over here. I've got 6 of them. There's 5 indexes. There's the S&P 500, NASDAQ, Russell 2000, New York Stock Exchange, and Dow. And then this over here is the IBD 50, which tracks growth stocks. It helps give a kind of a halfway decent gauge of the types of stocks that I tend to trade. So I'll look at these on daily time frames, on weekly time frames, and on monthly time frames. And that's giving me a fairly decent sense of what the general market's doing. there's a couple of indicators that are on here. We don't need to get into all the nuts and bolts into the weeds on the stuff right now, but there's a few different indicators that I look at. I'll also look at the types of stocks that I'm interested in, right? I mentioned growth stocks, so I screen every single week for new growth stocks, and I build a universe list. So I'm just looking at a list of all the stocks that pass my screens, and then I'm seeing, how are these ones doing? Are they doing well? Are they not doing well? Are they setting up in the types of patterns that I like? Are those patterns quality? And then I'll take a look at the types of stocks that I'm actually in and trading, because my process should, right? It should lead me to the best opportunities. And if the best opportunities, right, the best setups, if those ones are performing well, then that tells me something about the market. If they're not performing well, that also tells me something about the market, or at least how I should be participating in the market. And so I developed this system, and what part of this does for me is that I don't need to listen to the news or gurus or anything else. I'm observing what's here. And that's one of the big benefits of developing a system like this for ourselves, is that we could choose to put whatever we want in it. And if we stay disciplined to our process, then anything that's outside of it becomes noise. Now, of course, we can, as we evolve, we could decide to tweak things, right? So maybe we add something, maybe we remove something. That's perfectly okay. We should do that as part of our evolution. We should also have dedicated times for when we're going to evolve, not just, looking at random things throughout the day, because that'll completely mess us up. So, anyhow, back on track. That's how I go about answering the question of how to prepare myself so that I don't miss out. And that's how I know that this environment, while the NASDAQ is pushing higher and looks pretty nice, it hasn't been quite as easy as one might think. Right? I color code my chart. And so when I'm in a red, yellow, or green condition, I overlay it here on the NASDAQ. We're in a red condition right now, right? Well, with the NASDAQ pushing towards new highs. Now, how is that? Well, the market breadth hasn't been that great. Sure, I've picked a few winners, right? I'm in NVIDIA, right? Like this is my portfolio right now, what I'm sharing with you guys. So NVIDIA, Birkenstock, BIRK, recent IPO, Twist, TWST, Meta, bought a couple of days ago, and cybersecurity. This is another one there that you could say squatting potential. Anyhow, so it hasn't been that easy going, because if it were easy going, I'd have probably close to a dozen stocks by now. But it's been somewhat slim pickings. Right? We'll have a few stocks that are pretty good. They'll start to set up, but if it's not a high quality setup, then I'm not going to be interested in it. I don't want just to be in the leader. I want to get in the leader at the right time, because if I don't get in the leader at the right time, well, maybe this happens. Right? Kava. This is one that I started to trade back here. Right, and I was in this one for a while. I missed the part of this rally. I think I sold the last bit of it somewhere down here. I missed that shakeout and reversal, but 30% move. Now this potentially setting up again, but it's not the type of setup that I'm interested in, so therefore I should pass on it. Maybe somebody else is looking at this and this fits their model of exactly what they're looking for. If it does, fantastic. Who am I to judge? But for me, this does not fit my model, so I'm not trading this. If I did trade this and it's not something that I'm modeling, then I'm just taking random trades. I hope that makes sense. And if I start taking random trades, then I'm off process and I'm off what's going to lead me to what we're all after here, right? Every single one of us watching this, myself included, we're all after a steadily rising equity curve. Am I right? Type into the chat if you agree with that. If we're all after a steadily rising equity curve, then we should have a process that continuously points us in that direction. And if we're just chasing the random trades because something happens to fit one part of our criteria, or because we think that we're missing out, then we're going to be stuck in neutral. And I don't think that any of us want that. Anyhow, if you guys want more on my process, I share all of it in the Trading Mind Wheel book. It's right behind my head, right back there. And you could get the Trading Mind Wheel over on Amazon. Anyhow, back to sizing, right? The last point of the day, sizing, and then we'll open it up for questions. So if you guys do have questions, please start posting your questions into the chat now, so that way we could collect them. But let's go over to sizing. So sizing, how should we size? I'll tell you how I'm sizing. I'm sizing small right now. Earlier, I had mentioned that I have 3 sizing strategies, right? Or 3 types of sizing. I have a small, a medium, and a large, basically. And it corresponds to these color codes. Red is small, yellow is medium, and green is large. And what this helps me do is figure out, should I be going heavy or light? Well, it just so happens that we're in an environment right now where I should be going light. Why should we be going light? Because there's more stocks that are starting to behave like this. Here's a couple of alerts that also went off. Yeah, Uber. This one looked good at the beginning, right? Triggered this alert over here from a low cheat area. Price popped off on heavy volume. This one, I didn't take this one. I may have mentioned this on Wednesday's show, but in case if I didn't, the reason why I didn't take this one was because price gapped above my entry. Whenever price gaps above my entry, it does something to the risk. Now, the risk on this is right down here. This says that it would have been 5.28%. So let's just say that I buy this instead at the open. Right? The open was 68.90. On what day was that? That day? No. On that day, it was 71.31. So let's adjust this to 71.31. Close enough. So instead of being about 5%, now it's almost 7%. So I've increased my risk significantly, right? Almost by a third. That's not managing risk well. Look at this number here, right? The only thing that changed was the entry point. Still maintaining the same stop, still maintaining the same target. Take a look at this number here, the reward to risk ratio. If I buy it on the gap up, my reward to risk ratio goes to 1.76. Not so great. If I keep it back where it was originally, it was 2.68, right? Almost a full point higher. That's why we don't want to chase. That's why we don't want to be like the surfer that's running after the wave, because it's going to screw us up. And it's going to put us in positions like this. You don't want to be in positions like this, because the fear, right? Well, what's the fear? The fear is that, oh, price is going to run off and hit this gain without me. You're only focused on the profit. What we need to be focused on is the downside as well. We need to be focused on the full picture. And that happened here. It also happened on this one here, Zeta. Now, this is another one. The alert went off. I ended up not taking this trade, but even if I did take this trade, this was one that would have just stopped me out at break even. Maybe I would have taken a pinch off up here. I probably would have. But overall, the trade would have been fairly close to a break even trade. And so when I start to see more trades, not just the ones that I'm in, but the ones that I'm interested in, like Zeta, like Uber, I was interested in those. They did this. I didn't trade them, but I was interested in them. So I still want to track them. They do this. Then I see one that I actually did take, follow suit. I want to be a little bit more defensive. I don't want to take all the hard fought gains that I made over here and over here and over here and just throw them away. So, how can we adjust? We could be a little bit more conservative with the new trades that we put on. And when the new trades that we put on start to act well, that tells us that, hey, you know what? Now it's time to start testing, putting on a little bit more size because it's a signal from the market. And if the new trades start to work well, then we could scale up a little bit more. And then when they stop working, it's time to scale back. This is something called progressive exposure. I talk about it in the Trading Mind Wheel too. So anyhow, what questions do you guys have? I've been talking quite a bit here. Post your questions into the chat. We've got a few more minutes here. Post your questions into the chat. I'm going to grab a drink of water while I'm waiting. And by the way, make sure that you are on our newsletter, marrowwealth.com/newsletter, and get our updates. We send it out fairly close to every day. I'm trying hard to get better at sending them out every day. And we send out lots of free material, education, all sorts of stuff. So hop on the newsletter and get your questions in. Let's see, I'm looking over here at Rumble. No questions from Rumble. I have a few people over here on YouTube. If you guys have questions, get them in. A whole bunch of people from X watching. Don't just sit there and watch. Get questions in. This time is yours. I want to help you out as much as I possibly can. But if we're good, then I'll bid you guys adieu. I'll give you one more moment to get questions in because I know that there's also a little bit of a lag between the stream and what you guys are seeing. Here's a question from Joe. Joe says, "Hi, Mike. Another I was stopped on today was iBit. Seems like it's just in chop mode. Let's take a look at iBit. IBIT. This is the Bitcoin one. Now, the problem with that I have with all the crypto ETFs is that they tend to trade erratically. And the big part of the reason why they trade a little erratically is because they are supposed to mirror the coin that they're attached to, right? So this is for Bitcoin. So it's supposed to mirror Bitcoin. Bitcoin is busy trading 24/7. This one is just trading during regular market hours. So you're going to be prone to some more swings with this, even more so than the coin itself. So for me personally, I trade the coin, but let's take a look at this here. So it was stopped out today. It seems like it's just in chop mode. I'm tired of this chop and think maybe I won't touch it till all-time highs. Yeah, maybe. Maybe we were looking at this one the other day, I think. That's how we have some of these other annotations on here. But this is the neckline, right? So didn't we say that the entry on this would have been somewhere in this land? So if that's the breakout area, then uh, buying the breakout is one of the things that allows us to get confirmation before entering. You know that there's some people that do very well with buying on weakness. That's not me. I prefer to buy on strength, even if the strength is on a lower level. Sometimes, every once in a while, right? And now we're getting into a little bit more advanced. Sometimes, like if price is sitting right on a moving average, right? Like this one's a poor example, but this one does happen to be sitting right around the 50-day moving average. Sometimes what I would do would be to drop down to a lower time frame, maybe look at the 30-minute and see how price is consolidating around, and then try to play a bounce off of that intraday level and try to be like a sniper, getting very, very tight risk. It's only if it's set up properly. This isn't set up properly for that. This is within a larger consolidation. Um, is there an example that I could give where one would have been like that? Yeah, you know what? I think Twist was like that. But Twist was dropping down, tightened up right over here. And the reason why I got in on Twist over here was because of the 30-minute. Right? Because if I had my stop way down here at the daily low, that would have been almost risking 8%. But instead of risking 8% on this one, I was able to risk 3% on this one. So instead of this being a 4R trade, this is almost a 10R trade. That's how we could start to have the reward to risk ratios really work in our favor. It's a fairly advanced tactic. But anyhow, that's how my mind was working on this one. Joe says that I've been holding IBIT for a few weeks. So let's take a look at IBIT again. IBIT. Holding for a few weeks. Okay. So was it on this break here? Something like this? Yeah, but if that's the case, it does seem like it's if we're looking at where it is now, right? Well, rather than looking in the rearview mirror, because we don't know what price is going to do tomorrow or the next 5 minutes, but we do know where price is at right now, and we can tell that if we're looking at this section here versus this section here, is price getting tighter and more controlled, or is price getting wider and looser? Price is getting a bit wider and looser over here, isn't it? How is price behaving around the 50-day moving average? Well, at least for right now, it's below the 50-day moving average. We don't know how it's going to end the day. Did price make a lower low? Yes, it did. Price undercut some of this support. So you're correct to work under the assumption that, yeah, we're in a choppy area, right? And it's not an assumption, it's looking at the facts. The fact is that price is getting wider and looser. Price undercut the support area. And what tends to happen when you have those elements? What tends to happen is that you get a little bit more chop. So if you're not willing to sit through a deeper pullback, then cutting it there is the proper move. Any other thoughts or comments or questions? We're a little bit over, but that's okay. We're going to hang out if we've got any other questions come in. All right. If there's no other questions, then I want to wish everyone a wonderful weekend. Thank you so much for being here. It's always a real pleasure. And if you have any topics or questions or anything that you'd like me to answer on a future show, by all means, please reach out. Reach out to me on social media. Reach out to me by email. Get onto the newsletter. You see it scrolling down there at the bottom. Get on there. Reply to one of the emails that you get, and I'm glad to answer questions as much as I can. All right. That's it for today. I will see you guys next time. Take care. Much love. God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.